Welcome back to the deep dive. We really need to talk about Tuesday.
We do.
Specifically, Tuesday, January 20th, 2026. If you were just looking at your calendar, it was, just a Tuesday.
Right.
But if you were looking at the news wires like we were, it felt like the entire operating system of the world just got a patch update that nobody asked for.
That's a great way to put it. It was a real convergence, wasn't it?
It was.
Yeah.
We're looking at a stack of sources here: Tech Republic, Men's Journal, SCOTUS US blog, investing.com dash, and the theme is, well, it's pretty undeniable. It's about power.
Exactly. Who has it, who's buying it, and who is trying to rewrite the rules to keep it.
Yeah.
Usually you get one big story, right? A big tech story or a big geopolitical one. But rarely do you get retail, media, and the Federal Reserve all shaking the foundations on the same afternoon.
And what I love about this mix is that they seem totally disparate. Like, what does a grocery store in Illinois have to do with the Supreme Court?
Yeah.
But they all circle back to this one idea: leverage. Let's start with the one that hits closest to home, quite literally, the retail wars. I was reading this report from Tech Republic about Amazon's latest move, and I have to say, my jaw hit the floor.
Oh, yeah.
They aren't just building a store. They are building a fortress in Orland Park, Illinois.
It is massive. We're talking 229,000 square feet.
Wow.
To give you some context, the average super Walmart is about 180,000. So Amazon isn't just dipping a toe in here.
Not at all.
They are building a big box that makes other big boxes look like shoe boxes.
And the location? That's key. Orland Park, 30 miles outside Chicago, prime suburban territory.
But here's the thing that jumped out at me in the analysis. We spent the last decade hearing that retail is dead, right? E-commerce is king.
Right.
But the experts are calling this move Walmart jealousy.
Oh, I saw that statistic. Is it true that something like 93% of Amazon's own Prime members still shop at Walmart?
That's the number. That is the number that keeps Amazon executives up at night.
I bet.
Amazon won the war for I need a phone charger in 2 days, but they lost the war for I need bananas and detergent right now.
The weekly errand run. Walmart owns that.
They do, and Amazon has tried to crack this before. Remember the 4-star stores? Or the confusing rollout of Amazon Fresh? Those were small steps.
Incremental.
Yes. This Orland Park facility is a total strategic pivot. They're trying to blend their warehouse efficiency with the, consumer accessibility of a Target or Walmart.
And the mechanics of this place sound wild. It's
Yeah.
not just walking down aisles. The report detailed this backroom feature that sounds like a game changer.
Oh, it is.
You order on the app while you're driving there or even walking in, and the system just picks the boring stuff for you.
Exactly. I mean, think about the friction of grocery shopping. Nobody enjoys hunting for paper towels or wandering aisle 12 for the right brand of cat litter.
No.
In this new model, that's all backroom inventory. Robots, probably using the micro-fulfillment tech they perfected with Whole Foods, they pick those staples for you.
And they're waiting at the counter.
Waiting at a counter. You, the human, only spend your time in the front room, browsing the fresh produce, the bakery, the stuff you actually want to see and smell.
So it's like a mullet. Business in the back, party in the front.
That is surprisingly accurate, and it optimizes the square footage.
Right.
You don't need wide aisles for toilet paper if robots are picking it. It allows them to run a warehouse and a grocery store in the same footprint.
But I have to ask, does it actually work for the town?
Mm-hmm.
A 229,000 square foot automated box sounds like a traffic nightmare.
You'd think people would be breaking out the pitchforks.
You would. But according to the local reporting, Orland Park's mayor, Jim Dodge, he is all in. He's talking about economic vitality.
Of course he is.
And despite the automation, a facility this size still employs people, and the construction alone slated to start this year for a late 2027 opening. That's a massive contract.
Yeah.
Seems like they're willing to risk the traffic for the tax revenue.
It's a bold bet. Amazon is betting they can out-Walmart by removing the one thing people hate about Walmart.
The walking.
The endless walking.
So speaking of betting billions to remove the competition,
Yeah.
let's pivot. The media landscape. Because while Amazon is trying to buy your weekly errands, Netflix just wrote a check to buy your entire childhood.
Uh-huh.
The news broke. Netflix is acquiring Warner Bros. Discovery WBBD for $83 billion.
This is the merger of the decade. And we have to correct the record on something because a lot of people are comparing this to the Disney-Fox merger.
right.
This is different. This is an all-cash deal. And that detail, that matters more than anything else here.
I saw that emphasized in Men's Journal. $27.75 per share, cash on the barrelhead. And that's really why they won, right? Because Paramount was in the mix, too.
Oh, Paramount was desperate for this deal. They were in a bidding war for months. But Paramount's offer was a mix, cash and stock.
Ah.
So, put yourself in the shoes of a WBD shareholder. The market has been incredibly volatile, which we'll get to. Do you want Paramount stock, which might tank next week, or do you want cold, hard cash from Netflix?
No-brainer.
It was the certainty of cash that sealed the deal.
But it wasn't a clean fight. The reporting on this hostile bid from Paramount is absolutely spicy.
Oh, yeah.
They had backing from the Ellison family, sovereign wealth funds from Saudi Arabia, Qatar, and they were fighting over this specific unit called Discovery Global.
Yes.
I read through the breakdown, and it felt like Paramount was saying this unit was worthless, while WBD claimed it was the crown jewel. What was that about?
It's financial engineering at its finest. Discovery Global holds a lot of the international distribution rights and debt obligations. So Paramount argued it was worthless to devalue WBD so they could buy it cheaper.
Of course.
And WBD argued it was worth billions to keep the price up. It's like telling a guy his house is ugly, so he'll sell it to you for less.
Right, but Netflix just bypassed all of that.
Bypassed the whole drama. They just put enough cash on the table to make the arguments irrelevant.
And now Netflix owns, well, everything. 302 million subscribers plus Harry Potter, DC, Lord of the Rings, Game of Thrones. I'm just picturing a crossover where Batman fights the Demogorgon.
Please don't give them ideas. But yes, the IP library is staggering.
Hmm.
However, this is where we have to put on our legal hats. We looked at an analysis from the American Action Forum, and they are screaming antitrust.
But not the kind of antitrust you usually hear about.
Exactly.
Usually we worry about monopoly, right? Prices going up. Oh no, my Netflix sub is going to be $50.
Okay.
But the report highlighted monopsony. I had to double check that one. But that's when there was only one buyer, correct?
Precisely. A monopoly hurts the consumer. A monopsony hurts the supplier. And in this case, the suppliers are the writers, directors, actors, the crew.
The creators.
The creators. If Netflix owns 31% of the U.S. market, which is the post-merger projection, and they own all the major studios, they become the main buyer of creative labor.
So if you're a scriptwriter and Netflix says, we're paying you X, you can't really go down the street to Warner Bros. Anymore.
Because Netflix is Warner Bros. It pushes wages down for the creators, even if it keeps subscription prices stable for us.
That's a crucial distinction. It's not just about what we watch. It's about the ecosystem of people making it.
And that 31% market share is the magic number. The American Action Forum notes this crosses the presumption of illegality threshold in antitrust guidelines.
So the DOJ is going to be all over this.
You can bet on it. They'll take a very hard look at this.
Okay, so we have a retail giant flexing its muscles, a media giant consolidating power, and now we move to the biggest flex of all. The White House versus, well, basically Europe.
Right. This Greenland story has just spiraled.
From real estate curiosity to economic crisis in record time.
It really has. According to the reports from PwC Ireland and Investing.com, this has escalated into a full-blown trade dispute. It started with the U.S. offer to buy Greenland. Denmark said no.
And the White House did not take no for an answer.
Not at all. Now they're threatening a 10% tariff on a specific list of European countries, Denmark, France, Germany, the UK, and others, starting February 1st.
And the threat ramps up, right? It goes to 25% by June 1st if they don't sell.
It does.
And it's so fascinating because usually tariffs are about, I don't know, protecting steel or something. This is explicitly transactional. Sell us the island or we tax your cars.
It's economic coercion for territorial expansion. And the EU is furious.
I can imagine.
They're preparing a counter-tariff package targeting $93 billion in U.S. goods. They're looking at using their anti-coercion instrument, which is a legal framework designed for exactly this kind of scenario.
Wow.
But the scariest part isn't the trade war itself. It's what Ray Dalio talked about at Davos.
Capital wars. That phrase sounds terrifying, but I think a lot of people hear it and just think trade war part 2.
But it's not. Dalio is talking about something much more fundamental. The bond market.
Right. Okay, break this down for us.
Let's do it, because it's vital. Think of the U.S. government like a person with a credit card.
Okay.
That credit card is the U.S. Treasury market. We borrow money from the world to pay our bills. And the limit on that card is determined by how much the rest of the world trusts us to pay them back.
Got it.
A trade war is like arguing with the cashier about the price of milk. A capital war is when the bank manager, in this case, foreign nations like China, Japan, or the EU, decides to cut up your credit card.
That is a terrifying analogy. So Dalio is warning that if the U.S. becomes too aggressive, our allies might just stop buying our debt.
Exactly. And if the bank stops lending, interest rates in the U.S. skyrocket because we have to bribe people to buy our debt. The value of the dollar could plummet.
And that's why he's pushing gold.
That's why he's suggesting investors move 5 to 15% of their portfolio into gold. Gold is the hedge against the credit card getting declined. It's a bet that the system of trust is breaking down.
And it seems like that trust is under attack from all sides. Because while the White House is fighting Europe, it's also fighting the Federal Reserve right here in D.C. We have oral arguments at the Supreme Court tomorrow, January 21st.
This is the case about the attempted firing of Federal Reserve Governor Lisa Cook. The administration has cited mortgage fraud as the cause.
But the legal analysts on Scodia's blog are pretty unanimous that the evidence there is thin, to put it mildly.
It's a pretext.
It's a cover story. The real question is, can the president fire a Fed governor just because he wants to?
Yes, it's a battle for control. The Federal Reserve is supposed to be independent. They set interest rates based on data, not based on what helps the president's poll numbers.
And if the Supreme Court says, yes, the president can fire Lisa Cook at will, then the Fed stops being independent.
It becomes just another political agency. And going back to your credit card analogy, if the president controls the Fed and wants to print money to pay off debt, that scares the investors even more.
Destroys the credibility of the currency.
Exactly. Now, there is a glimmer of hope for the institutionalists here. Justices Kavanaugh and Alito, who are usually very pro-executive power, have dropped footnotes in previous cases suggesting the Fed is special.
I saw that term quasi-private. What does that even mean in this context?
It means the Fed isn't just a normal government agency like the EPA. It has a unique historical structure. It has private shareholder banks. And Kavanaugh and Alito have hinted that this quasi-private status might protect it from the president's firing power.
So if they rule that way, it saves the Fed's independence.
Yes. But if they don't... Well, the markets are in for a very wild ride.
So we have Amazon changing retail, Netflix monopolizing media, and the government potentially breaking the bond market. You would think the stock market would be in free fall.
You'd think.
But I looked at the S&P 500 this morning, and it's fine. Why is nobody panicking?
This brings us to my favorite part of the research pile, the taco theory.
TACO. Please tell me this stands for something delicious.
It stands for Trump always chickens out.
I mean, it's catchy. But explain the logic. This is from Robert Armstrong, right?
It is. The theory is basically a read on the president's negotiation style. He makes a massive, terrifying threat.
I'm going to put 25% tariffs on everyone.
Right, or I'm going to fire the Fed chair. The market panics for a second. But the theory says that ultimately, the president views the stock market as his scorecard.
So if the S&P 500 drops 10%, he gets scared.
He gets scared and retracts the threat. He chickens out.
So the market has just learned to ignore the screaming. I saw analyst Tom Essay was basically saying, buy the dip.
That's the playbook.
When the headlines get scary, you buy stocks because you assume it's all a bluff.
That has been the winning strategy for years. But, and Essay puts a huge warning label on this taco, he says the sheer volume of threats in early 2026 is testing the limits.
We have Venezuela, Greenland, the Fed, credit card rate caps.
It's a lot of bluffs to manage at once. It's the boy who cried wolf scenario.
Eventually, the wolf actually shows up.
Or the villagers stop listening, so the boy has to actually let the wolf eat a sheep just to prove he was serious.
That's a dark metaphor, but it fits. Okay, let's try to land this plane. We've covered a ton of ground. We have Amazon redefining the physical store.
With robots and scale.
We have Netflix redefining the media landscape.
With cash and IP consolidation.
And we have a geopolitical and institutional crisis that is rewriting how money and power work in Washington.
It's all about rewriting the rules. Amazon is changing the rules of shopping. Netflix is changing the rules of Hollywood labor. The White House is testing the rules of global finance and the Constitution.
And this leads us to a final, slightly terrifying thought to leave you with. We talked about the taco theory that the stock market acts as a check on the president. Stocks fall, he backs off.
And we talked about capital wars, the risk that foreign nations stop buying our debt. Here is the collision point.
Go on.
Imagine a scenario where the taco theory works too well. The president threatens Greenland. The stock market, believing it's a bluff, stays high. Investors keep buying.
So the president looks at the market and thinks, hey, they love this. I don't need to chicken out. I can dibble down.
Exactly. So he imposes the tariffs. He fires the Fed governor because the stock market didn't warn him to stop.
But while the stock market is partying, the bond market, credit card company, is watching the house burn down.
And foreign allies, seeing that the bluff wasn't a bluff, stopped buying U.S. debt.
So you get a situation where the stock market is at all-time highs, but the bond market collapses, interest rates spike to 15%, and the dollar crashes. The usual safety valve. That doesn't happen until it's too late.
Exactly. What happens when the bluff is called, not by day traders in New York, but by central bankers in Tokyo and Berlin? That is the capital war scenario we aren't ready for.
On that cheery note about the potential collapse of global finance, we're going to wrap up. It's a lot to process, but that's why we're here. Keep an eye on Orland Park, keep an eye on Netflix, and definitely keep an eye on the bond market. Thanks for diving deep with us.
We'll see you in the next one.